Some of you might be thinking, but Rayner, this is not as easy as it seems, because there are times where I see the market is in an uptrend like this, then it goes down lower, and it continues up higher. So now, Rayner, let me ask you, Rayner, is this now in a downtrend because we now have a lower high and lower low? So that's a good question, right? Because in market structure, in an uptrend, you don't always get a series of higher highs and higher lows, because there are times where the market can make a pullback, and within the pullback, right, the market gets messy. It forms a lower high and lower low, like what you're seeing over here. Or sometimes it could even do like this over here. Market goes up higher, then it chops up into a range. You thought it's going to be a reversal, and then boom, it breaks out higher. So how do we know whether an uptrend is intact or not? So this is where I'm going to share with you. Pay attention, right? Something really important. Is what I call, is this, right? Basically, an uptrend is invalidated only after the price breaks below the swing low that precedes the breakout. What do I mean by this? Okay, so let me give you an example. So if you look at an uptrend, okay, price goes up, comes down, goes up, comes down, goes up, comes down, goes up. So when we talk about the swing low that precedes the breakout, we are actually referring basically to a major swing point on the chart. Now, when I talk about major swing point, it can be hard to decide. Like for me, I know this is a major swing point, this is a major swing point, this is a major swing point. But to new traders, they can't tell. So how do we know that's a major swing point? Is that you want to look at where did the market broke out previously. So you can see over here, previously this was the breakout point, right? Over here, this is the highs, and the market broke out over here. So this is the breakout point. Now, where is the swing low that precedes the breakout? The word precedes means before. Where is the swing low that happened before the breakout? So you can see that the swing low that happened before the breakout is this swing low over here. So in other words, right, this uptrend will be intact unless the market has break and then close below this swing low. Until that has happened, right, we would say that the uptrend is still valid and we are expecting higher prices to come. Okay, we would say the uptrend is only invalidated if it breaks below the swing low that precedes the breakout. Okay, so let me give you an example. So if you look at this chart over here, let me ask you, quiz time. Okay, I'll just make your life a little bit easier. This over here, right, is the high, okay? And when the market breaks out of this high over here, right, you want to ask yourself, where is the swing low that precedes the breakout? And then you have this swing low over here. Okay. Now, when you look at this chart, right, you can see that now the market has actually break and close below this swing low, right? Yes, break and close below it. So my question to you is this: is this uptrend still intact or it has been invalidated? 5 seconds. All right, think about this. 1, 2, 3, 4, 5. Okay, so the answer is this: is that the uptrend is actually still intact because it did not break below the swing low that precedes the breakout. Okay, this uptrend is still intact. So you can see what happened next is that this market, it did dip down lower and then continue dip down lower and then continue up higher, because this is the swing low that you want to pay attention to. If only if the market breaks and closes below it, then we can say that, hey, this uptrend is no longer intact and the market could possibly go into a range or reverse down lower. So remember, right, uptrend is invalidated only after the price breaks below the swing low that precedes the breakout. Okay, so one more example. Look at this chart over here. At this point, the market has break below this low over here, has break and close below it. Let me ask you, is the uptrend still intact or has it been invalidated? Otherwise can be said that the uptrend is destroyed. Yeah. So what's your answer? 5 seconds. 1, 2, 3, 4, 5. Okay, the answer is this, right? So if you first and foremost find out where is the swing low that precedes the breakout, this is the breakout point. Right, this is the highs that we are referring to. So at this point, the market has break out of this highs. So where is the swing low that happened before the price breaks below this highs? This is the swing low over here. So at this point, you can see that the market did break below this swing low. So at this point, this is what I'll say, right, that the market, the trend is no longer intact and it could possibly, go into a range or even reverse down lower. Okay, now you're able to tell the difference between a pullback and a reversal. Next, let me share with you a powerful trading strategy, right, that I use myself to trade the markets, right? This allows you to profit in bull and bear markets. So let's get to it. Okay, this first example is the chart of Swiss franc against the Japanese yen, the daily time frame. So first thing is the trend. Let me ask you, what is the trend? Is it up or down? You can see the market is in an uptrend. Good. Next one, where is the area of value? Okay, you can pause this video and visually identify the area of value, but for me, here's where I'll draw it. Over here is one, and possibly another one over here. Okay, these are the two area of value on my chart, right? So why is did I plot this two level? Because this is previous resistance, price breakout, retest as support. Previous resistance, price breakout, retest as support. So now price could possibly come back to this area of value or this one over here. Now, why don't I draw area of value, let's say over here, or maybe over here? Well, because at this level and this level, I don't want to be buying at that price point, because if the market do reach that level, the market is probably already in a downtrend. I don't want to buy in a downtrend. I only want to look for selling opportunities in a downtrend. So no point drawing those two levels, because if the price do get to it, the trend would have already reversed, and I'm no longer looking for buying opportunities. So now that we have spot, right, these are two area of value, the two blue box over here. Next thing, we are looking for a valid entry trigger to go long. As you know, you've learned things like your hammer, your bullish engulfing pattern. So let's see what happens next. So in this case, the market came into our area of value, but do we have an entry trigger to go long? Let's find out. Yep, we have it, right? The market formed a hammer, and this tells us that, hey, the buyers are now temporarily in control. So if you understand the story behind this, you can see that the market overall is in an uptrend. The market make a pullback towards this area of value. In area of value is where buying pressures could step in and push the price higher. And you got clues, right, that buyers are stepping in, because the market opened over here, tried to break down lower, couldn't, but reversed eventually and closed near the highs of the day. So this tells you that buyers are stepping in. So what you can do is to go long, right, on the next candle open. So let's say next candle open over here, right? This will be our entry price, right, the opening price. So let's just say we change this to green to signify our entry. What about stop loss? So for stop loss, right, I like to, if you remember, right, we like to set it a distance away from price structure, a point where it will invalidate our trading setup. So you can see that this is an area of support. So if the price breaks below this area of support, we want to be out of the trade. So at which exact price point, right, do we know we want to get off the trade? So one way to kind of like quantify that answer is to actually use the ATR indicator, right? So I'll just show you average true range. Click on this. Okay, I'll just delete this one. I'll use this one, right? The settings I use is 20 period. There are 20 period and SMA. You click OK. So what you'll do is to find out what is the ATR value. Okay, so you can see that right now the ATR value is 1.221. What this tells you is that over the last 20 trading days, right, the market moves an average of $1.221 dollars per day. Okay, and the way to kind of like know where exactly to set your stop loss is to find out the low of this candle and minus 1.221. So the low of this candle, right, is actually, let me just bring my cursor here, is 137.15. Okay, so 137.15. So I'll just take 137.15. This is the low over here, and I minus off with one ATR, which is 1.221. And what does it give me? I'm just going to pull out my trusty calculator, and I get 0.221. I'm just going to round up to make things easier. 135.93. Okay, so this will be my stop loss level. So what I'm going to do is to bring out this line over here. I'll just change this to red to signify stop loss, and it's at 135.93. Okay, and there you have it. This is my stop loss level. And if you recall, what about target? Where do we want to exit if the market moves in our favor? So usually I like to set my target just before, right, the recent swing high, just before resistance. And from what I'm seeing on the chart, right, this is an area where sellers might come in to push the price lower. So just put this, let's just change this to blue and to signify our target profit. So now for those of you who want to, be a little bit more or rather want to know what is your risk to reward on the trade, you can actually use this tool. Just click on this long position. Since you're looking at a long trade, click on this, and green is your entry price. I just press the tool on over here, shift this one over here to your stop loss level, which is the red one, and this top one over here, which is the blue one, which is your target, and it'll tell you what is your potential risk to reward on this particular trade. So I'm just going to adjust it slightly to be a bit more accurate. Okay, so you can see that your potential risk to reward on this trade is 1.13 as shown over here. This means that you're risking $1 to potentially make $1.13. And since this is a cherry pick chart, all right, you can see that the market eventually did reach our target over here, and you have exited with a profit.